Welcome to another S&P Futures day trading recap on an Apex evaluation account. Quick disclaimer before we begin. This account was dangerously close to liquidation due to a terrible mistake I made where I bought a new 90% off evaluation account and forgot to switch to it before entering a large size trade, which ended up being a loser. So I took the big loss on this main account I was trading on YouTube. Since it was so close to liquidation, I decided to gamble a little today and took on bigger size trades than my risk rules allowed in an effort to bring it back to a decent spot. With each trade, I was ready to lose the account, which is obviously not a responsible way of trading, and only justifiable in a situation where a brand new account would be preferable to the current state, which described my account at the start of today. I still labeled each trade with a particular setup, but as you'll see, there was a lot of sizing in even when the original trade idea was invalidated. I've marked these as YOLO trades. This first YOLO trade started as a second entry short, but when price started moving against me, instead of letting myself get stopped out, I decided to average down. After I size in, price starts dropping and actually gets within one tick of my profit target before reversing back up. I notice a bit of a trading range start to form and decide to size in again. This time I raise my profit target to the bottom of the trading range. Honestly, I just get lucky here, as I almost get stopped out for a huge loss, but a random flush downwards scalps me out for my first YOLO win of the day. This next YOLO trade started as a failed second entry short with a wide stop loss. As you can see from my chart, I actually drew out a measured move to indicate where I was expecting price to go. When price looks like it's starting to break out to the upside, I size in with a stop order that gets filled. Of course, most first attempts at breakouts tend to fail, so when price falls back down into the range, I decide to average down near the bottom of the range, near where my stop loss was. When I get filled in the second ad, I'm prepared to get stopped out, but nope, price respected the trading range once again, and I'm able to scalp out at the top of the range for my second YOLO win in a row. The funny thing is that the measured move target I drew out earlier does eventually get hit after I exit the last trade, which actually led to me having a little bit of FOMO. When price seemed like it was forming a triple top, I decided to try a short on a failed second entry long setup. Unfortunately, it starts breaking upwards after my entry, and I add two more shorts around the EMA, hoping it would act as resistance. Price does seem to get rejected from the EMA, and I decide to exit at the bottom of this new trading range that's beginning to form for my third YOLO win in a row. At this point, I've successfully YOLO traded myself out of the huge hole I was in, so I decided to go back to my normal trading strategy. Bulls just seem to be in full control at this point, and when I see a great second entry long setup here, after an EMA bounce, I enter long and catch this beautiful move up to new highs. This was easily the least stressful and best trade of the day. I take another trade that was in line with my rules, except this just wasn't a very good one. After a big sell-off, it looks like the bears are taking control, especially after I see the EMA start to look like resistance in a lower high form. Price bounces from the lower trend line of this higher timeframe upward channel, and it gets stopped out for my first loss of the day. Now this is where things really started to go off the rails. I had taken so many YOLO trades today that my trader psychology became all out of whack. I saw that price had put in a higher low and a higher high, indicative of another bull trend, and I instinctively decided to just put on another YOLO trade long, shortly after I got stopped out of the last short trade. I'm so confident in this long trade that I add more contracts where the EMA and trendline were, thinking that there was a lot of confluence for support here. There aren't too many things in life that can humble you as much as day trading can, and my overconfidence leads to a crushing loss when price plummets through these support levels to stop me out. I think this last loss just put me on tilt. Seeing those two huge bear bars, I impulsively hopped in short, and price almost immediately starts to reverse back up after I enter the trade. With my mind on tilt, I decide to increase my short position at the EMA, and once again at the lower trend line. After the second ad, my size was so big and my judgment was so clouded that I decided right then and there that I was willing to risk it all for this trade. As you can see, I was actually still in a net profit on the day at this point, but I didn't care. If I took another big loss here, it would have wasted all the effort and luck I used YOLO trading my way up to this point. All I wanted to do was win back my previous big loss and was willing to risk the entire account to do so. You can see how this trade unfolded, but there really was no strategy at all. I was just adding more size when price went against me, which is a very dangerous thing to do. I'm very fortunate that price just happened to be stuck in a tight trading range during this bout of tilt trading. By pure luck, I end up adding short positions at the top of the trading range until I hit my max size of 10 contracts, and I'm able to scalp out at the bottom of the trading range, and I'm actually able to make back the previous loss plus a little more. Today was definitely the most exciting day of trading I've had in a while, but I don't necessarily mean that in a good way. As you can see from my trading footage, outside of trades 4 and 5, I didn't really have any sort of trading plan once my YOLO trades went against me, and I was basically just stubbornly sizing in at random times, hoping for price to go my way. You probably couldn't tell from the footage, but I was also pretty stressed during these YOLO trades, as I knew that if price continued going against me, I would either take a massive loss or lose the entire account. Trading without risk management and without following a trading plan is no different from gambling, and this type of irresponsible trading is just more stressful, more likely to make you feel FOMO if you exit too early, makes you more susceptible to tilt, and just an overall much higher risk of blowing the account. The fact that I told myself I was done with the YOLO trading after the third trade, but then I started YOLO trading again after it took my first loss, just shows how dangerous it is to even do it in the first place, because after you get away with it and actually get some lucky wins, you start to think that it's okay to do it again. In reality, the more you try sizing into losing trades, the more likely you'll eventually blow your account. Anyway, I think it's clear by now that I really do not recommend trading this way, as it just isn't sustainable. The only reason I did it was because my account was so close to liquidation that I had nothing to lose, and I consider myself extremely lucky to have won most of these irresponsible trades where I kept sizing in. As you can see, the only reason I was able to get away with it was because I happened to do them in the middle of tight trading ranges. Luck was just on my side today, and the account is now back to 51,899. We're basically back to where we were before the previous day's massive loss due to the mistake I made, and despite today's results, it was a great reminder of why I don't trade this way anymore. Starting tomorrow, I'll be back to my more sustainable way of trading, where I'm only taking good setups and following my risk management rules. As always, thanks for watching. Please leave a thumbs up if you enjoyed, and subscribe so you're notified of the next time I post a trade recap. In the meantime, I'll continue posting daily profit and loss updates in my channel's community tab.